Okay, good day, students. I hope you're well today. We're just going to do the second part of the question, but before we go to the second part, or the second financial statement, we just want to recap quickly, right? We did the statement of comprehensive income. The purpose of the statement is to calculate what is the profit and the loss, right, of a company, profit or the loss of a company. We calculated our cost of sales because the amount was not given, but they gave us these elements. We accounted for depreciation. We calculated that. We calculated the adjustments, which was salaries, the insurance. Let me just highlight what we did. Depreciation, we calculated the cost of sales, and then we added up everything, and then we got to a total, a profit of 155,000. Now this profit we're going to take to our statement of financial position. Okay, this is our question paper. As we worked through, we ticked off everything. So that basically means we don't need this part of the question anymore. We can basically go and fold it up. We're only going to use this part. The only line item we're not going to use is the inventory, because we use that in our cost of sales calculation. Now we're just going to put all the non-current assets, as we have indicated with the non-current assets, all the current assets, all the equity, all the liabilities together. Okay, so let's first go and draw our framework. Okay. And then remember, when it comes to our non-current assets, we always have 3 columns. But before we even go there, you need to put in your heading. Your heading is Statement of Financial Position of Xhosa Limited as at 31 December. As I told you, the statement is already given to you there. Basically, you just need to copy it and just put in the company's name. So we're busy with the statement of financial position of Xhosa Limited as at the 31st of December. Now, what's the difference between these two statements? The one statement, if I can use this piece of paper, this is your financial year, right? The one statement, which is called your statement of comprehensive income. This statement accounts for everything from the beginning of the year till the end of the year. So meaning that is why you're not allowed to take any income or any expenses over to the new year, right? So you need to then, if there's anything which is normally an adjustment, you need to convert it either to an asset or a liability, like we have done with this table, right? Then you can take it over to the next year. But you need to remember the statement of financial position. We only want to know what happened on the last day of the year, meaning on the next day is our new year, so we want all the balances on the last day so that we can carry it over to the new day, to the new year, right? So that is why when it comes to this statement, you will see when it comes to accumulative depreciation, you're going to take your last year, previous year's accumulative depreciation, and you're always going to add the current year depreciation. That will give you your new cumulative depreciation. Okay, so remember I showed you this table when we said depreciation. Another thing you need to remember, our new accumulative for the Furniture is 92,000 and 260,000 for our motor vehicles. So what is it that we need to know? We need to know we must still account for the wages, salaries and wages in the statement of financial position. We need to still account for the closing balance inventory under current assets. We need to still account for insurance under the statement of financial position, but under current assets, right? And then we need to account for our cumulative depreciation. So when we do that, you will know where we got the amounts from. So now we're going to start, right? Remember, your framework is always assets. And then it is non-current asset, that's the total of your non-current assets, right? Then you're going to have 3 columns. Okay, before we even do the 3 columns, let's just go and check what is our non-current assets, right? We've got capital, owner's equity, mortgage bond, non-current liabilities, land and buildings, non-current assets. So we're going to put that one first, land and buildings. Then we have motor vehicle. We have motor vehicle. And then we have furniture. And then we have drawings as owner's equity. Okay, let's just make this a bit bigger. Even though you do have the question in front of you. Drawers as owner's equity. Accumulative depreciation, we're also going to use here. Fixed deposit is a non-current asset, right? So we're going to write fixed deposit here. Fixed deposit. And then we have long-term loan, non-current liability, accounts receivable, current assets, bank current assets, accounts payable, current liabilities, right? So let's just finish our non-current assets. So remember, 3 columns. Okay, let's just do this. Okay, wait. Let me start this over. Sorry guys, I'm just going to start let me just get the columns correct. Statement, I'm just going to rewrite this. I just want to get the columns correct. Limited as at 31 December 2017. So yeah, I'm going to write assets. All right, these are my assets. And then I'm going to, and this will be non-current assets. Okay, here's your cost price. You minus accumulative depreciation will give you your carrying amount, right? And then we're going to just put the amount there for our non-current assets. So we have land and buildings. We have motor vehicle. We have furniture. And we have fixed deposit. Now with fixed deposit, I don't have the 3 columns because remember, fixed deposit does not have a cumulative depreciation. So my fixed deposit, I will basically just add in the amount here under current, and then I'll put the total amount for my non-current assets, right? So let's just do this, and then we'll take our question again. Okay, so motor vehicles, is 950,000. So in the cost price, we put on 950,000. Motor vehicles, that's land and buildings. Motor vehicles is 700, and I'm going to tick it off. 700 cost. Furniture, 340 cost. So you put it 340. And then you go to fixed deposit. Fixed deposit is 200,000, and you do nothing there. You just add it here, 200,000. And now we're going to work out what's our current assets or our carrying amount for our land and buildings. Guys, please know, land and buildings, if the building is on the land, land never depreciates. Like for example, if your grandfather bought a piece of land for 5,000, today you can get up to 500,000 for that piece of land, meaning that that land never depreciated. Land always appreciates. So we never have a cumulative depreciation. So you say cost price minus a cumulative depreciation gives you your carrying amount. So it's 950 minus 0 gives me 950. Then we have motor vehicles, right? Remember what was our depreciation for our motor vehicles? 260,000. How did we get that? Current year depreciation, which is 110, and the accumulative depreciation that they already had, which was 260,000. And then we have 92,000 for our furniture. Remember, we got it from our calculation. Okay, so now we're just going to calculate it, and we're going to say 700,000 minus 260,000 gives us 440,000. And then we have 340,000 minus 92,000 gives us 248,000. And now you're going to add up all this. And this is going to give you your non-current asset amount. Let's just highlight it here. So we're going to say 950,000 plus 440,000 plus 248,000 plus 200,000 gives us 1,838,000. That is our non-current assets amount, right? Now remember, what's our formula? Non-current assets plus current assets. So next we have current assets. So we're going to have a total here under current assets, and that will give us our total assets. So we take our question again, and we see what is our current assets. Now, remember, accumulative you've also used, so you can scratch that out. Current assets. We've got bank as current assets. We've got, remember, inventory closing balance, right? So we've got inventory closing balance as current assets we're going to use. And we've got insurance prepaid that we must also have under current assets. Now there's 3 current assets that we normally always have, right? And those 3 I'm going to write down. The first one is your inventory, which is your closing balance. It was 210,000. Then you have accounts receivable. That one is 215,000. Then we have bank. Now remember with bank, if it's on the debit side, it's a current asset. If it's on the credit side, it must go to the bottom as a current liability. Bank balance 131. So we're going to tick those three. We've used accounts receivable and we've used bank, right? And you need to remember our insurance. So you're going to write, now what was this? Insurance was an expense that was prepaid. So you're going to write prepaid expense, and then you'll write insurance, and you'll write the 3,000 rand. So you're going to write prepaid expense, insurance, and then you're going to write the 3,000. And that's that. And then you're going to write is equal to total assets. So you're now going to add up this block to give you your current assets, and then you're going to get your total asset amount by adding your current assets plus your non-current assets plus your current assets will give you your total assets. Okay, so let's do the current assets. 210,000 plus 215 plus 131 plus 3,000 gives us 559,000 plus my 1,838,000 gives me a total assets of 2,397,000. Now remember, if your total equity and liabilities is exactly the same amount, then your statement is balancing. If not, as I have told you, don't change any of these amounts, because this is where your marks lie, right? We're not so interested in totals, but the importance is we're testing, do you know, what comes under current assets, right? Were you able to take it from the question and put it on the answer sheet? That's what we are actually testing. Then we have equity and liabilities. Now remember, I told you, you get an equity statement. Now we're not going to do an equity statement on its own. We're incorporating it here. So meaning we're going to take the formula that was supposed to go into the equity statement and we're going to apply it here, right? So we're going to say equity. How do we calculate equity? We say opening balance capital plus, we know we made a profit. Now, is there, remember what is the original formula? The original formula is, let's just use this paper. The original formula is opening balance capital plus additional capital contribution plus retained earnings plus or minus profit or loss minus drawings. This is the original formula. But now, you don't have to put in anything that is not on the question. Did you see additional capital contribution? No. Right? Did they say anything about retained earnings? No. Did they say anything about drawings? Yes. We've worked out the capital and we've got opening balance capital. So those are the only 3 line items that we need. If they didn't give you anything, don't put in those. It's just unnecessary time that you are wasting. So we've got our opening balance capital, we've got our profit, and then we're going to minus our drawings. Right? And this is going to give us our equity amount. So we're going to take this. We're going to add the block, which will then give us our equity amount. So we're going to get our equity amount. Yeah. We're going to add up what we get in this block, and that will give us our equity amount. So what's our opening balance capital? We go to our question. Right on top, it's 900,000. I'm ticking it off because I've used it now. 900,000. Then I go to my drawings. Is there drawings? Yes, here's my drawings. My drawings is 100,000. I'm ticking it off. I must minus it. And remember, the profit I get from my previous statement, which was 155,000, right? And for those that can't remember, I showed you this at the beginning, but here is our 155,000 profit. If it was a loss, you would have minused it here, right? So now we're going to say 900,000 plus 155,000 minus 100,000. So our equity is 955. Okay? Now we have our non-current liabilities. Now remember, equity plus non-current liabilities plus current liabilities will give us the total equity and liabilities, right? Now what's our non-current liabilities? Let's see. Oh, here's one, mortgage bond. And mortgage bond is 712. So it's mortgage bond. $712. And what else do we have? We have, okay, long-term loan. And long-term loan is 520. Okay, long-term loan is 520,000. And let's see what is still outstanding. Now, can you see? The only thing we still need to account for is our accounts payable, which we know is a current liability plus our adjustment. Okay, so we're going to add up this block to get our, so we're going to add up this block to get our non-current liability amount, which is 712,000 plus 520,000 equals to 123,213. Right? And now we have our current liabilities, which we must also add. And now, what's our current liabilities? What we have left is our accounts payable. We're going to use that now, 185,000. So it's accounts payable, 185,000. And remember our adjustment. Right? What was our adjustment? The salaries and wages. What was salaries and wages? An expense that is accrued. So it's accrued expense. Remember with insurance, we said it's a prepaid expense. We said it's a prepaid expense. Here we're going to say it's accrued expense, and then we just write the name of the expense, right? So it's accrued expense, salaries and wages. And what was the amount? 25,000. So now we're going to add up this block, and then is equal to total equity and liabilities. Okay, so we're going to say 185,000 plus 25,000 is equal to 210,000, right? So now we're going to take the 55,000 plus 1,232,000 plus 210,000 equals to 2397123, and then we need to check, is it balancing to our total assets? What's our total assets? 239,700, 239,700. So your statement is balancing. Now, please do not, as I said, do not change anything if your totals are not balancing, because your marks is actually here. This is what we mark, right? The totals, yes, if the question is out of, let's say, 60 marks, we will then look at the totals as well. But what's important is the marks on the statement itself. Thank you so much, students. See you for our next study unit, which will be study unit 5. Thank you.